Hello, everyone. This is Socrates and Tyler Jenks. We are with the Hyperwave YouTube channel and Lucid Investments. We are coming to you today with some analysis about the price action of Bitcoin, and we're also going to be taking a quick look at some various alt tokens that are really struggling and at very, very important areas of support, especially as they relate to the BTC pair. So this is something I've been watching with a bated breath, along with the market cap dominance metric, to see if it looks like Bitcoin is going to be able to gain back some of that dominance throughout this next run, or if it looks like it will give some back. We are very much hoping for the former, and it seems like that is what has been happening, especially over the last few weeks. So we'll be very excited to look at some charts today. How are you doing, Tyler?
I'm doing probably better than I have in a long, long time. Great action in the crypto market. The maximalists have been, or the standard bearers, have been holding on to a proposition that we can't prove because it's purely theoretical. We've never gone through something like that before, but we've been saying as a group for a long time that Bitcoin needs to shed itself of all or almost all the altcoins, either through Bitcoin dominance by going up faster than they all do, but more likely because they will begin underperforming in up and down markets against Bitcoin. Way too early to say if that's happening, except for some of the examples we'll bring you today that are, in my mind, conclusive that they have broken down for the last time relative to Bitcoin and are on their way down to very low points, which means Bitcoin dominance should begin to move very quickly up to 70, 75, 80, 85, 90%. And more importantly for me, we're getting a pullback in Bitcoin right at a very important point above the $13,000 level. We've dropped all the way down into the 11s, and we could even go lower as the show goes on. That to me is a tremendous buying opportunity for Bitcoin that I've been waiting for, to put the other 10% back in and add to it. So very excited that the stock market soared today, that the gold market, which was down this morning, ran up $10, $14, $17. I've been too busy to look at it in the last 30 minutes, but we will look at all of that. The big theme today, though, is the altcoins relative to Bitcoin and what it means for the last 10 years of data beginning to deteriorate very quickly on the part of the alts and in the favor of Bitcoin. So I'm going to turn it over to Socrates, and I'm going to pull up some charts that I find really interesting. I'm sure Socrates has got the same charts, but I'll look at a little longer time frame maybe on some of them. So Socrates, glad to see you again, and let's get started.
All right. I'll go ahead and pull up a few charts here. And all right, screen sharing now, and looking at Bitcoin here. There was a very important area of support that I was watching closely and really was expecting for the price to hold, and it looks as though it has not held that area. So for me, 12,000 was really a key number on the way up, and then also on the way back down. Basically, when we were in this area trying to continue to the upside after finding support at this trend area. I was looking at 12,000 as being a very important area of resistance. There were some large orders just sitting on the books, waiting to be bought up. And as soon as that did get bought up, we took right off, went right through from 12 up to 12,800 in the matter of 12 hours. So that was a very important area of support for me. And then when we ran up here, I was really thinking that this would provide a great possibility to enter. When this dip happened and pulled back to 12,000, that is one of my favorite places to enter. When you get a breakthrough of a boundary, specifically in this case, a horizontal boundary, and then you throw back to retest it, that is one of my favorite places to go ahead and enter. And this is exactly what you want to see, in the sense where it doesn't spend much time there at all and quickly rebounds to the upside. Unfortunately, I wasn't awake when this occurred, and I wasn't able to get a piece of that. But as it stands, I am now actually kind of happy, because I would not have been taking profit in here. I was really expecting a return back up to the 14,000 area. That was based on a number of things that we went over yesterday, primarily the pitchfork. After we broke through the median of the pitchfork, I was expecting us to go ahead and retest the top boundary, and that did not happen. We pulled up a little short and then broke down this area. So this is very important, this last candle, that easily could have gotten a strong bounce from here. It's only been open for 40 minutes. Instead of getting a good bounce, it has the full candle below this trend line. And now it is threatening to break down the 50 EMA on the 4-hour chart. If we do close below there, my target would be a return to the 200 EMA on the 4-hour chart, which is currently waiting at 10,500. Slightly too early to call for that. Would need a close below this 50, and this still could be an area where it's giving a bit of a head fake before continuing to the upside. If we do find support above this 50 EMA and then gain some of this ground back, this could turn into a nice reversal candle, which could lead to significantly more upside. I feel like I'm getting some feedback. Is there anything coming through on your end for the audio? It's not happening now, so I'll just go ahead and keep on going.
It sounds pretty good to me.
Great. All right, so yeah, this is a very important candle with a lot of time left. If we can get back above 12,000 in this candle, that would be a huge sign to me that we're going to continue to the upside. If this candle does close below 12,000, then that is going to tell me that I am most expecting a breakdown of the 50, which should lead to a return to this 200 EMA on the 4-hour down here at 10,500. So this is a very crucial area. We did just get a strong dip, and let's go ahead and take a look at how much. If we take the high from 12 hours ago down here, it's already dipped close to 12% in less than 12 hours. So just based on that by itself, I would not expect much more downside in the next 12 to 24 hours. In my experience, Bitcoin really doesn't like to move more than about 10 to 15% in a 24-hour period. It can, but it's rare. So anytime I see a sharp move, I want to measure the percentage of that move. In this case, we're getting close to 12% at about 11.84, and then I'll relate that to how long it took to get there. In this case, less than 12 hours, really like 10 hours, 11 hours. And that is a type of move that tells me that it's going to be hard to keep going down from here right away. Moving more than 15% in 24 hours would be very surprising. Like I said, it can happen, but it's definitely not to be expected as far as I'm concerned. So seeing this very important boundary getting tested while the price is already made a huge move is something that I want to not be premature in saying that this has broken down, because it really does look like 12,000 is broken down right now. But like I said, there's a lot of time left in this candle. What if this thing closes at 12,271? Now we've got a bullish dragonfly doji with a huge wick that would look very much like this did not break down. So this is an area where it's time to wait and not be overly confident in either until this candle closes. Once this candle closes, we should have a very good idea of what to expect moving forward over the next 12 to 24 hours. As it stands right now, anything can happen, and we need to not be premature with our thinking that this has broken down 12,000, because it has not closed below, even on a 4-hour basis, below that 12,000. 11,969 is really the area that would be important to me. So as long as we're not closing below there, I'm not thinking that this is broken down. Once that does happen, then the most important area of support for me, the trend and the horizontal, if that gets broken down, then I would absolutely be expecting a return to the 200 EMA on the 4-hour at about 10,500. And I'm going to go ahead and just take a quick look at a couple alt charts before turning it over to Tyler. And first one we can look at is Litecoin USD. We looked at this a couple days ago, and I was very dismayed about this death cross that we got on the 50 and the 200 EMA. That was very much a sell signal that I should be getting fully out of my position here. I explained that I didn't, because I was very intrigued by this area of support and the higher lows, higher lows, higher lows. So what I did was I set a hard stop loss at $116 and some change. So right around here, that was triggered. I explained in that show, I don't remember exactly when it was, but basically that I would always be getting out here based on this sell signal. Reason that I wasn't was I felt like it was worth taking on a couple percentage points of risk to hold through and see if this thing could follow through and do basically what Bitcoin did. And it sure didn't. So that is what was really, really surprising, was as Bitcoin was kind of forming the same pattern, we see kind of in here where we have the bear trend. It's like basically a symmetrical triangle. And Bitcoin took off, but Litecoin did not. It tried to. It was a head fake, and then it broke down hard. So while Bitcoin is just basically correcting after creating a new higher high, and is right now, this is just a healthy pullback that still has plenty of room to create another higher low, Litecoin didn't make it through. And therefore, when it broke down, it didn't have any gains to correct. It just flat out broke down. And now this is a chart that is very much telling me that the crucial area of support is broken down. Bitcoin still hasn't closed. We're needing to wait. That's not the case with Litecoin. Its crucial area was about $117. That was based on its horizontal and trend line support. This very much did break down, and it did it in a big way. So that is something to me that is very important, especially with the halving right around the corner. What is going on here? It's gone back down to the $100 area, and it could be threatening to break that down while leading into the halving, which would definitely throw a lot of people for a loop. And I am glad to have gotten out of there myself. So let's go ahead and take a look at Ethereum really quickly. It is threatening to do something very similar. It is now testing its crucial area, I would say 285 to 287, 282 to 287, we'll call it, is its crucial area of support, and it has not broken down yet. This is a spot where it would make a lot of sense to me to go ahead and put a hard stop loss at about 274. Somewhere in that area, because if this does break down, it's probably going to do it in a big way, like we saw with Litecoin, just a big, quick dive, where if you don't have a stop loss set, you're probably not going to be able to get out at the price that you are kind of looking at. So that's why I would like to consider a hard stop loss there if I had any Ethereum for sale. And the ETH BTC chart is the one basically the most important chart to me, has been for a while. We've been looking at this very closely. Let's get a chart with some more history, because this really is something that is pretty remarkable as far as I'm concerned. This descending triangle that we have in the blue is absolutely massive. It is indicating, let's see if we can figure this out. From top to bottom, we'll just use that right there, an 82% move. If this breaks down, the target from this descending triangle would be, let's see here, it would be 28% of 0.0243. Target would be 0.006 if this descending triangle breaks down, which it is on the absolute verge of doing so right now. If that happens, 0.06 would be the measured move from this descending triangle, and it is formed basically another descending triangle that's on a much smaller scale. We can see that is drawn in red. For 2019, it has created lower high, lower high, lower high as it continues to eat away at this support. The first time we tested this support, you got a massive bounce that was basically a full-on alt season right here. Second time we tested, we got a much smaller bounce. Third time we tested, a much smaller bounce. Now we're testing and not even getting a bounce. And I am shorting this basically on this breakdown in here is right around the 0.025 is where I have entered. I've been talking about this for the last couple of weeks, saying that my finger is on the trigger to sell this thing, waiting and waiting and waiting for further confirmation. My ultimate confirmation of breakdown would be a weekly close. So seeing a weekly close below, I'm going to call it 0.0237, is what would confirm this massive descending triangle with the 0.006 target. So we don't have that target yet, and we only will get that target if a weekly candle closes below, call it 0.023. And that is getting very, very close to happening. Furthermore, the smaller descending triangle is much closer to breaking down. And depending, since it is so much smaller of a pattern, I might be comfortable considering it confirmed with this daily close below. So we did have this daily close at 0.0244 yesterday, and that is enough for me to think that this thing has confirmed. And it is still, though, at that point where if it can find support anywhere above that 0.023, then it still has a chance to make a massive explosion to the upside. So these are kind of my last points. The do or die zone is where we are right now. This is my do or die zone for Ethereum. If it breaks down, this is the last area where I think it could find support. And as we see, when it comes into this do or die zone, and it does, when it decides to do instead of die, you can get this massive wick and then a huge move to the upside. So definitely not, in my opinion, not time to be overly confident that the rug is getting pulled out from under, because it still is at this area where if we get a strong wick and turn it around, it really could have a big move to the upside. So as long as we are still flirting with this do or die zone, I don't want to have too much short exposure at all. Just have a small position, and also do not want to be overly confident in one way or the other. This is an area where the risk reward is fantastic for both sides of the trade. I've been mentioning that throughout the last few weeks, that this is an area where if you're going long, it makes a whole lot of sense because your risk reward is tremendous. This is also an area where going short makes a whole lot of sense to me because the risk reward is tremendous and very well defined. So that's two things that I really like, and this chart has both of them. So I would not blame somebody for longing this chart, nor would I blame somebody for shorting this chart. But that could change very quickly once this do or die zone, once the price gets out of here in a convincing way, and it will move hard. Once it does, if it breaks down, I think it'll break down hard and fast. If it bounces, it could bounce hard and fast. So definitely keeping a very close eye on this one. And just kind of wanted to mention the trade that I was looking at, that when alts are going down versus BTC, regardless of what BTC is doing, it presents some tremendous opportunities. So if Bitcoin is going up, down, or sideways, and no matter, in all three of those situations, alts are going down, that presents, alts are going down against BTC, I should clarify, that presents some tremendous opportunities to basically hedge, but also expect both positions to profit. So back in here, I was talking about longing ETH USD because we had a bullish pattern and some resistance breakthrough. And I was talking about hedging that with a short on ETH BTC. So if you notice right in here, that's when the price was down around 278 on the USD pair, and the BTC pair was up around 0.029. And we do see that both of those trades did work out, and it was hedged. If ETH BTC broke down and this position lost money and had to take a stop loss, well, this thing would have probably broken down even harder, and therefore I'm hedged on this position. And now we see that this one did sell off, even though ETH USD was able to rally. It wasn't able to keep up with Bitcoin. Therefore, the ETH BTC pair really just went down and down and down. So that is everything that I wanted to look at. I'm going to send it back on over to you, Tyler.
Okay, very good. Thank you. Great analysis. Let's take a look at a couple of things here. Okay, this is Bitcoin itself on a 12-hour basis. I talked to Tone this morning about this. He had sent out an alert on his alert service that this 12-hour was on a perfect 9, It actually went slightly higher than the 8, and then it began to fall apart. And so I quickly looked at other time frames on just Bitcoin, and we had only gotten up to a 4. We had been talking about these Bollinger Bands, and I'll bring those up in just a minute. But after this move, where we actually got a candle with the body completely above the top, we stalled out for a period of time on a 9. We had a pullback, but after a 1 went higher than the 9, then we had this weird 2, 3, and 4 to the downside. Then we got a reversal up off of the 4, but we had a price flip. So we started again with another price flip, a 1, 2, 3. We only made it to a 4, but none of the bodies got above the upper Bollinger Band. So this is really reacting off the 12-hour. The 12-hour hit a 9 because it didn't go through all that nonsense, whereas the 4-hour never showed that kind of weakness going up into the 8 and the 9. Notice the 8 did pierce the upper band of Bollinger, and then we've got this big drop. So the mid band is just right beat below us, and I would love for us to be able to hold that 11,468 level, or break it, but not too much. Maybe come back to my old phase 2 line, which is now at the 11,160 level, and then heading higher after a 1 to 4 12-hour period. So I basically have been counseling people today that 1 to 4 on a 12-hour is basically 1 or 2 days. So just be patient for the rest of today and tomorrow to see what this 12-hour brings us. Now on the 1 day, very similar action where the 6 goes blowing up through the upper Bollinger Band, gets rejected by the 7. We make it to a 9, which is one of the weirdest 9s of all times, with the 3 previous candles having higher highs. But we did get a 9. We got a 1 to 4 pullback and then higher. But the higher was struggling all the way. We had a price flip after the 4, started a 1, 2, 3, broke up through the upper, and now we're coming back down. So once again, a reasonable target, and we do have an aggressive 13 sell signal on this 3, which is interesting. I'd like to see if we hold the old phase line. We're coming back down to the 11,100, which is my top green line. I thought we had broken once and for all above it. I was all excited that here we go. We're ready for a big move to the upside, but no such luck. Petered out again. This is the weekly. The weekly has made it up to a 5, continues to climb up this trend line, which is not made for the weekly, it's made for the monthly. And on the monthly, as we talked about yesterday, it's in no danger at this point. We're still well above it. We're on a 5. I still think this thing is headed much higher, but in the intermediate, in the short term, it's run into some problems. So all of that is interesting to me, mainly because I've been holding off adding to my positions personally and for clients. But this is now, in my mind, so far, giving us an opportunity to be able to put money back to work in Bitcoin. And depending on where this ends, how quickly it gets to where it's going to go, we could be able to buy back around the top of this green line, somewhere around the 11,000 level. If we take out this important setup trend line, which we could do if we break even a little bit below the red line and the green line, then we've got another story to tell in terms of the downside. Notice how moving averages are rolling over, how the upper band already is rolling over on the Bollinger, how the lower band is now accelerating up. It looks like this is going to be an area of very strong support, so it better hold. There's nothing that says that after a 9 on the 12-hour that you only get a 1 to 4 candle pullback. That's what you expect. So we're on the first candle. So we probably will have a second candle. We'll probably have a third candle. And then the question is, when we get between the third and the fourth candle, where all this stuff is coming together. The old phase 2 line, my 11,100 line, and the stop and reverse point, which will be up there also. What happens if this is actually a 9 to the downside? And we take all of that stuff out and return to the lower Bollinger Band at 99.81. We take out the stop and reverse. Now what we're looking at is we're looking at this setup trend line down at the 9,000 level. And then a lot of new questions come in. So too early to make any calls, too early to put any money to work. But I like what's happening. It's giving us a chance to load up for the longer term, which in my mind is now fully in the bullish camp. But that has nothing to do with the intermediate and the short term. Okay, the other things I wanted to look at is I wanted to look at, just as Socrates did, the Ethereum Bitcoin. I'm much more negative than Socrates is, because this support has broken. Now this only goes back to June, but it's significant how sharply we broke below it, how sharply we broke below this blue line that is set up on the 12-hour from the sequential system, how we closed below it on the 4. Now we are getting a bit of a pop on the 5. We're only on a 9 in the countdown. So the probability is, in my mind, that we might make it back up to these lows before heading lower. That's on Ethereum versus Bitcoin on the 12-hour. When we go longer, let's take a look at the weekly. The weekly goes all the way back to 2018. And we've blasted through that on a relative basis. So the shorter time frames are struggling to keep up with these longer time frames. The longer time frames are telling me that Ethereum Bitcoin is dead. That we are headed much lower. Probably down to this 0.02. We do have a C13 coming in today, and you can see what's happened so far. We could reverse off of this C13, but right now this is a very bearish pattern. Take a look at Bollinger. We need to get a full candle below the lower band, which is now racing down. The perfect setup for the 6, 7, 8, and 9 to follow it lower. Notice if I take the price off of the weekly, and remember what we're looking at here is Ethereum in Bitcoin terms. And you take a look at the moving averages. And the moving averages on this pair are in a fully bearish posture, signaling a bear market on the weekly basis on the Ethereum Bitcoin pairs. Litecoin is not giving us very much more. And as Socrates wisely pointed out, we are weeks away, days away from the halvening. And you have to say, well, here we are on July the 19th, which is where we were on May of last year, a year ago, with no upward progress in this pair. Yes, it went lower. Yes, it went higher. Net, net, net. With only a couple of weeks to go before the halvening, we have no upward movement for over a year in the Litecoin Bitcoin pair. To me, that is devastating. Also note that we are playing around with the stop and reverse point, which Socrates has a lot more to tell us about. He has solved the problem of the stop and reverse point. We won't have time to go into it today, but he's going to post it on TradingView, and we will do a full vlog on the right way, the correct way that TradingView admits they were not using of calculating the way Wells Wilder did 40 years ago when I learned it. And still, I believe, is the most effective way of looking at it. We have wicked right down to it, and the explanation is complicated, how that stop and reverse goes sideways, but there is an explanation based on the way TradingView is doing the calculation. It is clear that if the stop and reverse had gone up, we would have broken it on this candle. But right now, we're going to have to wait for another candle before we get that determination. Also notice on the ADX, on the pair, we're talking just about the pair, the price action of the ADX, which is very difficult to interpret in a positive way. Okay, so now I want to go a little shorter than this weekly, but I think the weekly is devastating in my mind. I have not looked at the monthly, so what the heck, the longer the better. And I see nothing really. We had a red 8, we flipped over to a 4, we had a price flip to a 1, we got up to a 2, now a new price flip. This action isn't good, obviously, relative to moving averages. We are below all 3 moving averages on this price pair if we were to close here, but we're nowhere near the end of the close of the month. So I wouldn't get too excited about what this is telling us. But I think the weekly, the 8-day is interesting in the way the Bollinger Band has kept it below, above the midline. We are now again below the midline with a red 2 below a red 1. The 3-day has got a couple more days to go. It's on a red 7. It's broken below the midline of the Bollinger Band. Tried to pop back above it. Now all the moving averages are coming down into and around it. It looks to me like we've got 2 more months of downside on this pairing, which actually takes us through the halvening. So, no, I'm sorry. I'm looking at the 3-day. I'm getting too excited here. Sorry. And on the daily, do we have anything of interest? I don't really see it other than this last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of support that tried to rally back to the mid of the Bollinger has failed. And now we've got a price flip, and the probability of breaking down through the lower end of this band is pretty good. Notice also we did have a full candle below the lower Bollinger, which takes you back to the mid at least, and we didn't do it. We failed off of this 6 candle to get Bollinger on our side. We've lived below it ever since, and now we're dropping back down. Normally, you get something like this, you expect it to go to the middle. If there's any strength, it's going to go back to the top. There's no strength in this pairing. So my conclusion from all of this basically is, first of all, I'm going to go off stop screen share. Oops. Good. I thought I just canceled our log. I'm going to stay away from the buttons. Okay. So what we looked at is absolute drops in all the cryptos. If you take a look at CoinMarketCap, you'll see that everybody in the last 24 hours is getting killed, except, you know, for a couple of tiny things that somebody's bouncing in hopes to suck in some more suckers. Everything else is down, you know, anywhere from 10 to 20%. Big drops in crypto land. Bitcoin this is a big drop, and it's coming suddenly and sort of out of nowhere, as Socrates was explaining. But it does not change the long term. Now, just because the intermediate and the short term are giving sell signals kind of across the board, and certainly across all of the pairings of Bitcoin to the cryptos, does not mean that the short-term action and the intermediate-term action cannot accelerate to the extent that it begins to affect the long-term trend. It has not, nowhere near it. We've still got 4 months of upside on that long-term trend on the monthly Bitcoin, and that's what I'm sticking with. The Consensio is still completely bullish even with this action, although the short term is turning down, the intermediate term is going to be affected by this short-term action. But that's nothing to get worried about because we've only got a 10% weighting. So we've already taken steps necessary, according to Consensio, anticipating that some kind of a top could come in where we'd want to pare back if we were 50% in or even 25% in. We haven't taken that much of a risk yet on these trades, although we continue to hold the 10%. I want to put another 10% in and eventually another 30% above that. And if we can get above 14,500, which Socrates scared the heck out of me last night with his Wyckoff analysis, but I want him to bring that back up in light of the recent action we are seeing in just a second, because that shook me up at how it looked as if we could be getting a reversal pattern if we got back up to that 14-ish area and then drop back down, then got a lower high after that. We've interceded with this action, and I want to see if he believes that means that we might have disrupted that pattern. So I'm going to turn it back over, and sorry to throw that curveball at you, but I've been thinking a lot about that.
No, actually, I was going to ask to pull that up after you were done, so I'm glad that you thought of it. This action has been very important and has changed my analysis, but not in the sense that I'm going to say this isn't a Wyckoff distribution. I am now just looking at a different schematic of the Wyckoff distribution. There are patterns that follow the Wyckoff rules, but they don't have an upthrust after distribution or a spring if it was accumulation. So if we were to have that upthrust after distribution, which is that trap right at the top, right before it reverses, it would have had to have been on this last move. Here I'm viewing this as point number 7. And this is the move that it would have had to give us the upthrust after distribution on this wave. If we come down and find support again and then get back up there, there would be too many tests of this area of resistance to consider that next one an upthrust after distribution. So this very much has changed, but still could be following the pattern of distribution on the, let's see here, 4 hour. I think we can also see it on the daily. Which one's going to be better? Yep, definitely the 4 hour. Okay, so I'm just going to go through and as quickly as possible label these points. We've got number 2 is the buying climax. 1 is preliminary supply. 3 is the automatic reaction. And let's see, 4, this was the area that was a little bit off, but not too big of a deal. That is the secondary test. And then, let's see, 4 is there. 5 is that little bounce that occurs after the secondary test. And then we have 6 down here. And this point gives us 7, which is the secondary test of resistance, which it's confusing. There will be multiple secondary tests of resistance, and that is what 0.7 is. When we're after we have tested support twice, we have the automatic reaction, we have the secondary test, we've got point number 6. Now here is point number 7, and if I'm going to pull this one back up, this is where we would have needed the upthrust. Basically, that was the one that I was needing to see get above 14,000 for it to follow this pattern. We would have had the upthrust and then the upthrust after distribution. Since this didn't give us the upthrust, that's why I'm now viewing it as a better fit to this pattern. Next thing we would put in is, if I can ever find the right one, is going to be this sort of point of support that we see right here. And what we would expect is 0.8 to come down, find support, bounce back up, give 0.9, very important, get a lower high for 0.9. It's often very difficult to tell in real time if this is distribution or accumulation. And the most important thing for me is the signal of strength versus the signal of weakness. 0.9 being a lower high than 7 is a signal of weakness that is very important. 0.10 creates a lower low than point number 8, which is a signal of weakness, which is very important. The most important one to me is a lower high following point number 10, the last point of supply. That is when it is time to go ahead and, according to Wyckoff, cover all long exposure and enter short if you are so inclined. So that's what I'll be watching for closely. Do still think this could be a Wyckoff, but do not think that I wouldn't be afraid of 14,000 anymore based on that pattern. So definitely glad that you brought that up. And one other thing to touch on is that we do have our Lucid SAR that we have been working on. We should have it available to everybody here very soon. But this is the parabolic SAR based on Weld Wilder's traditional calculations. I've looked high and low across different exchanges. I haven't found any other place where you can get the parabolic SAR that is based on Weld Wilder's traditional calculation. As far as I know, this is the only place available unless you're going to calculate each and every one by hand. And let's just take a look at how well it has been working so far. Just make it a little bit bigger. So right here, we see the action that was so intriguing to us in that the price comes up and gets within as close as it can possibly get. This is way less than a penny because we go so many digits. The SAR is at 0.028304 and the high is 0.0280302. So that is 0.0000002
Wow.
away
Wow.
from the peak. And this can be calculated in real time. You notice that it's the same sort of progression here. At no time was this any lower and then moved up because of the price. At no time did that occur. This was always right here. And if at any point the price wicked above 0.02830,429, this would have broken and given us a new bullish SAR right here. That didn't happen. It stayed intact, moves sideways due to this action here, then starts accelerating back down and is remaining intact on the daily. There was just one other that I wanted to show. Look at this one right here. Price comes down, and 1, 2, 3, 4 candles in a row, it comes within a whisker of breaking the SAR. Doesn't happen, and the price continues down. Again, that's calculated in real time, and it does not adjust based on price coming up and near it. So this is something that is really exciting to me, that potentially will be the only ones that are using the real calculation for the parabolic SAR, and that could provide a big edge when everybody else is thinking they're using the right one, and they really aren't. So this is something I'm very excited about. I wanted to give a shout out to Casey Bowman. He has been helping us put that together. It's because of his hard work that we have this up here on TradingView. So we're going to be working to get a description together showing the exact calculation so that you could go through by yourself and calculate this and see why it is there in real time. So very excited about that, and you guys will definitely be hearing more to come. So go ahead and stop the screen share, and that is everything I want to do.
Congratulations on sticking with that. Most people don't realize how much work went into coming to that conclusion and finally putting the last piece of the puzzle together. So that's great work, and thank you so much for doing that. That's going to be very helpful for everybody. I can't remember what started this off, but it was a very important stop and reverse point that didn't make any sense to us, and I think it had to do with Bitcoin, but I can't remember now. It was so long ago. But anyway, we've got it now. What was it? Do you remember?
Yeah, I think it was actually the NASDAQ. I believe Ben Peters.
Yeah, that's right.
Screenshots. And what initially started it was when we were looking at it with Tone, and we were kind of blown away by how it had come to within a penny on so many different occasions.
Yeah, that's right. You're right.
So it's very exciting to come to a conclusion, and then also to see that it's still as precise as we originally thought that it could be.
That's excellent. So that's terrific. And we've gone almost an hour here. We started a little late, but let's just quickly pull up gold, because I don't even know where it closed. And if you don't mind doing that, and just the XAUs, I just want to see where it is. Very important. We broke through that 1380 top that has been there for 5 years. We've been above it ever since. And because we've been above it ever since, every day that goes by with it not coming back down lessens the chance this is a bull trap. I got a little nervous when we broke 1300 on a couple of occasions over the last couple of days. I'm still a little nervous, but I am fully expecting the gold to take off from here. I'm not sure if you're screen sharing that. Maybe you are, but you can see the big reaction today off that off those lows all the way back up to 1418. It looks like. So very important action today. If we take out the bodies of about 10 days ago and about 5 days ago on a closing basis tomorrow, I think we're off to the races. Very exciting. Would be the time that you would expect some kind of consolidation, and we aren't above it yet, but if we go slightly higher, I think we're going to see big prices coming in the gold market. Any reaction to that, Socrates?
I fully agree, and definitely think that breaking through these areas, that is what I would expect from here. This isn't really ascending triangle. I mean, kind of, but the point is there for me in the sense that we have horizontal resistance and we've got this higher low telling me that support is moving up, and therefore resistance has to be getting eaten away at. And if we get up to retest it again, I would expect a breakthrough or potentially another higher low to come in at about 1405 or so. But this is looking quite bullish to me. Definitely today's action for sure, but also really like how this found support above this pullback here. And as you said, we are now, the longer that we stay above here, the less likely it is that this was just a trap. So I'm feeling pretty comfortable myself that this thing should continue to the upside, and that we shouldn't really see lower prices than 1385 would be what I would expect.
Terrific. That's great. And how about just quickly pulling up the S&P? I think I heard the Dow hit all new time highs today. But again, I've been kind of busy. That's a very nice candle there on the S&P. It's a gap up from yesterday. Could be a continuation gap. Notice 1, 2, 3, 4, 5, 6, 7 days ago, we had a continuation gap in the uptrend on a daily basis, never filled. That's usually what happens when there's a lot of strength. You get a gap, you move above it, you don't come down below it, and then you gap up again. That action looks pretty good to me. I also heard that we went above 3,000. Let's see, what's the high today?
Sure enough, 303, 3003.
Okay, we poked our head above that 3,000 level. So I think my 3,300, I think Socrates was talking even higher, 34, off of some patterns, maybe as high as 35, is in play. Any of this can change, but right now that's looking very good to me. And maybe just take a look at the Dow. It's interesting that the Dow and the S&P are hitting new highs at the same time. The Dow has not done that since the beginning of all this action. It failed on the April-May pop to get above the September pop, and now it might have just poked up above it. Awfully close.
Had this one close above, and then this did wick back above. Got a higher low here. Yeah, I think I wouldn't. This definitely did create a new all-time high, but still hasn't closed of this
too
one.
Close to call. We need a couple more days. A week would be good. A weekly close up here would be great. And all these little tiny moves, wicks and trend lines and overhead resistance, all that sort of stuff, doesn't seem very important, but it's all important. It's very important. And is that the stop and reverse flipping after one day?
Yes, that is very bullish. As far as I'm concerned, you have a long uptrend, which tells you anytime these are on the same direction for a very long time and get really close to the price, that tells me that we're due for a correction and that we should flip them down to the other side. And that is what happened just yesterday, essentially. We did break it down, and then to have it reflip on the very next candle, that is very hard to do and is very rare. Reason being is that you have to create a new local high on one candle following a significant correction. So right here, we see that it broke as soon as price. It didn't have to close below as soon as it broke this one here. The new SAR gets printed above this candle at the extreme point of the prior move. So that extreme point was this all-time high right here. So we get the SAR gets placed above there, and then the very next candle has to essentially be able to get back up into that territory to be able to break that back bullish. So very rare to only see one SAR in either direction, and then seeing that tells me that it'd be like a one candle correction on the TD. That's going to be much more bullish than a 4 candle correction or a 9 candle correction, because it went back in the same way much sooner. That's kind of what I see this as. So that's very interesting. It's sure nice to have a SAR back that we can trust.
Absolutely. I don't know if I've ever seen a flip after one. I've seen a bunch of 2s and 3s and 4s, which are very short, but that is very unusual, and I agree is very bullish. So stock market, I think, is looking good. Bitcoin is pulling back, and the question is how far, and I'm licking my chops about putting money into it on a long-term basis. I've felt a little bad about taking such a small step at the 6,000 level. I'm feeling a little bad about taking profits at 8,800. I was feeling really good when we had profits from 6,500 all the way up to almost 14,000. I don't mind giving that paper profit back because now the long term in my mind has turned bullish, and I want to start building big positions as the price goes lower. If it continues to go a lot lower, all bets are off, but right now that's not the way it's looking to me. And with that, I will be quiet and turn it back to Socrates unless he's got something else he wants to show us.
I just have a question for you. You say if it goes a lot lower, then all bets are off. Do you have an idea of a certain price where that would be?
Yeah, I do. I wanted to buy between 7,500 and 8,500 on a pullback, but that was when we were struggling between 10,000 and 11,000. And we continued to struggle until we got a whole candle above the 11,100 level. The big candle didn't do that. It came all the way back down into the range. The next candle did the same thing. But we've just gotten a candle fully above the 11,100, which is what really turned me to the bullish side. So now I'm thinking I need to bring my buy points up from 7,500, 8,500 to something more like 8,500 to 10,000 or 9,500. If that gets taken out on the downside, I'm not putting actual buy limit orders in. And I'm not telling anyone to do that. We've taken all buy orders off the table until we see how this plays out. But I could see it if it drops down through the 11,100 and the 10,100 level back into the 9s, that I think the 7,500 to 8,500 is in play. If we get down to that 8,500 to 7,500, I might not buy there, because then my perfect buy zone is in the low to mid 6,000s. And from 14,000 down to the low 6s is a huge percentage drop. So much so that even down at that level, I'm going to be gun shy, because it could be that an intermediate term Bitcoin bull market has come to an end, and now we are still in the long-term downtrend, and 5,000, 4,000, 3,000, and 1,000 become in play. Now, each one of those steps, and there's a lot of them, are sequential. You can't go from where we are today down to 6,000 without going below all of those other points I mentioned. And that's typically what you would see, is we will incrementally work our way down, and we're going to have to just measure how long and how fast it takes to break through anything to the downside before it becomes clear where you want to begin buying again. Or in the worst case, where you don't want to buy. I'm far from that more radical statement, because all the long-term indicators are still pointing up. Major bull market in Bitcoin. I'm going to hold to that. One of the reasons we wanted to have this discussion today is it was a paramount for me that the altcoins don't come with Bitcoin. They get left in the dust. That's the definition to me of a bull market in Bitcoin. The only way it's going to happen. Otherwise, what would happen if it pulls a lot of these altcoins with it is it will fail again. And maybe in some kind of a hyperwave move, who knows? But then we're probably talking about another year, 2, 3, 4 years of screwing around before we can get going. I'm hoping and in some ways praying for the macroeconomic community that this is the real thing in Bitcoin right here, right now. And it leaves all the altcoins in the dust. They slowly settle like sediment at the bottom of the ocean as Bitcoin goes higher and higher. And the more they do, the higher Bitcoin will go. And the faster it will get there. And it'll blow through 20,000, blow through my 35,000 target. Tone today didn't have an upside target, but he's got an upside time. And that could end up at 50,000 or 70,000 or 100,000 before it gets to where it goes. I don't disagree with that, but I just don't see it with what I'm seeing in the charts right now. So much more than everybody wants to hear, but I just want everybody to hear a reaffirmation of how I look at the way these trends move and change and move from short to intermediate to long. And then as long as the long is intact, that's where you want to be. But remember, it can always begin to roll over on the intermediate and short term and call into question even the long-term trend.
Excellent. Great answer. Definitely in agreement with you there. The two most important things this year in my mind have been, first of all, was breaking through 6,000 in a big way. I was not at all bullish until we broke through 6,000. At that time, I started to look for some entries and started to reluctantly turn bullish. So the first most important thing for me was breaking through that and in a big way and in a convincing way. Second is what we could be seeing right now out of the alts. If Bitcoin really does leave them behind and we do see those major areas of support break down, what I'm calling like a do or die zone, if that does happen, then that would probably be even more important to me than Bitcoin breaking through 6,000. That would tell me that there are some major coins, like some big market caps that are going to be slowly going, and depending on time preference, I don't know how slow, but that will be transitioning into BTC. And as those market caps move towards Bitcoin, that will be like gasoline on the fire. Not only will there be new demand from people buying Bitcoin with new US dollars, but there's going to be people panic selling their alts to buy back into Bitcoin. And that's just going to be fuel on the fire and could really cause the next cycle to go a whole lot bigger than it would if we had to carry around the ball and chain of altcoins with Bitcoin every time it tried to move up. So some very, very exciting stuff that is going on. We'll be paying very close attention to those alt pairs, not necessarily because we like tracking alts, but because it could be the main story as it relates to the price of Bitcoin. So we'll definitely be continuing to follow those closely, and we'll be keeping our fingers crossed that rug gets pulled right out from under and bag holders start to come on back into a BTC. So very exciting. And with that being said, we'll go ahead and finish up for the day and plan on coming back to you guys.
Just one last announcement. Friday at 12 o'clock, 3 hours till 3 o'clock, we do have our webinar. And the webinar is on retirement accounts. It is a much more detailed look at not only what is out there, but more importantly, why is it supremely important for me as an investment manager to convince everybody to max out as much and as many of their retirement accounts as is legal to do. And we will give you all of the specifics. You know many of them, but we're going to show you examples of what happens when you do that. That is where you want your investment money to be. You don't want it to be in a taxable trading account. You want it to be in a retirement account. We will also talk about a retirement account that appears to be able to hold Bitcoin in it in the form of a Roth IRA. We'll explain how and why that works. We will also be talking about a number of international retirement accounts. Everybody's in the same bucket. Very few people have very little money in retirement accounts. Most people that have any retirement accounts never fund them properly. They come up with excuses why they shouldn't. They would rather go on vacation. They would rather spend it for school. They would rather do. We'll show you the things you can do legally with retirement accounts in terms of healthcare problems, with buying houses, with education, college education, and others, being able to take money out when there really is a reason to do it without paying penalties. We're going to go into a lot of detail, and I hope at the end of the 3 hours we have the response that Leah and I got when we did a 2-hour vlog over a year ago on this. We had many people say the first thing they did is they went out and they set up an IRA, or they fully funded or increased their funding to their 401ks. We've got some clients today that have as many as 10 different retirement accounts, and they have no money on the outside. It's all on the inside of their retirement accounts. And you are not restricted in what you can buy, depending on how you've done it. You can buy stocks. You can buy GBTC. You can buy gold. You can buy gold mining shares. You can do all sorts of things, but it differs, and we're going to go through the differences between all of them. We also have now the ability to have you pay the $150 in either credit cards or cash. And Leah has done a great job, along with the new CEO of Lucid Investment Strategies, my son, in getting this set up in a very short period of time. We could do it last night, and we had people that were using this last night on the website. Those people that don't have Bitcoin or didn't want to give up their Bitcoin, and I can see why they don't with what's going on with Bitcoin right now. You can now just pay with credit card, or I believe with cash, and it explains it all there. And I will turn it back over to Socrates, because he probably knows more about it than I do.
Oh yeah, it will be very straightforward to pay with your preferred method. If you want credit card, you can go ahead and enter that information. All major credit cards should be accepted. Also, if you would prefer to just pay with a debit card, of course that would work. And then I'm not sure about using a check. That might be available, but it will be very straightforward. When you go in to check out, all of the payment options will be listed, and yep, that is all set up as of yesterday. So
great.
Go ahead and head on over to lucidinvestmentstrategies.com, and that is where you can sign up.
Terrific. Very good. We hope a lot of you join us, and we've got 2 more days to go. We've got all the finishing touches being put on it, and then approximately 2 weeks after that, we've got the big one coming, which is the Consensio webinar for intermediate and advanced. We'll talk more about that after this one is over, because it's going to cover a lot of very important topics that are extremely sensitive right here, right now, with Bitcoin, with the stock market, and with the gold market. And so that's going to be a lot of fun. So enough of that. Thank you very much, Socrates. Great job again. Thank you all, and we'll see you again tomorrow.